Let's go. AMC. Its stock has been doing extremely well in 2021. In 2021, year to date, the stock is up 2,638%, and I think it could still easily double or triple from where it is right now with all of the shorts betting against it and retail investors still holding strong. But that doesn't mean other stocks can't do even better than that and become the next AMC, the next GameStop, and can experience a massive short squeeze similar to what we have seen already with GameStop, sort of what we're seeing with AMC. So in today's video, I first want to go over 4 different things I look at when I'm trying to find a stock that I think could see a massive short squeeze. It's not just what everyone talks about, short interest. There are a lot of other things that are easy to find, but important things to keep in mind. After that, we're going to go over the 5 different stocks, including AMC, which we will touch on at the end of today's video. So make sure to stick around until the end so you can hear what's going on with AMC, some big news that recently came out with short interest, with the CEO, with insiders, and a couple of other crucial pieces of information. So if you enjoy this sort of content, please be sure to like the video, helps me out a lot, subscribe to the channel, turn on the bell notifications, and also make sure that if you want to stay up to date on what is going on in the markets, whether that's crypto, stock market, or even tech news, make sure to check out our daily live streams at 9 a.m. Eastern and 5 p.m. Eastern time. We go live every single day. We have a great time talking, so make sure to join us then. Anyways, the first thing I want to go over is 4 things I look at when I'm trying to find a stock that I think could experience a massive short squeeze. So the first thing I look at is the short interest. A lot of times people are talking about this is the most important thing, and it is. In my opinion, this is probably one of the most important things you can try and look for. It's very easy to find. You just look up on Google stocks with the highest short interest. You'll get a whole list of them. You can look on the NASDAQ, New York Stock Exchange. You could look just in general. It's very easy to do. For example, AMC right now has a short interest of 21%. To put that into perspective, the average short interest is about 3 to 5%. So this is about 4 times higher than what the average is. So that's the first thing. Second thing I do like to look for in a stock that I think could have a short squeeze is going to be the volume. How many people are buying, selling, trading it in a given day? Over the last couple of days, we have seen AMC stock have volume as high as 800 million, and that is extremely high. On average, their volume is usually around 100 million for the last 6 months, and that's still extremely high. It's just because they've been getting a lot of attention in the news and everything like that. You need to have a lot of movement, a lot of people willing to buy, willing to sell, and that is where that volume comes into place. Third thing I want to look at is probably one of the most important things is going to be the community behind the stock, because you can't just say, oh, Wall Street Bets is behind it. Wall Street Bets has over 10 million people, and that's enough, because at this point, that's not enough anymore. That was enough for GameStop, but now you need to find, is there a large group of people who are particularly interested in that one stock? For example, with AMC, we are seeing a massive group of people on YouTube, on Instagram, on TikTok, on Wall Street Bets, just about everywhere. There is a specific group of people that want AMC to succeed, and the community is very strong. So that cannot be overlooked. And the fourth and final thing that I do look for in a stock that I'm, thinking could have a massive short squeeze is going to be the market cap. A lot of people say this isn't important, but I think it actually is, because if you have a market cap of $50-60 billion, it takes that much more money to move the stock. Think about it. If a stock that's $50 billion is going to double in price, well, that means you're going to have $50 billion more put into it, whether that's from just people buying it, whether that's from shorts, people shorting the stock more. You're going to have that much more money put into the stock. So anyways, those are the 4 things I look at. I'll put them all in the description, and I'll put it in the top comment. But now let's get into the first stock of the video, which is Clover Health. Clover Health had a massive run up today. Its stock did extremely well, up nearly 100%. And when you're looking at this right now, this is on Google Trends. One of the things I said is the community behind it is strong. You can see on Google Trends over the last 7 days, interest has spiked dramatically. That means a lot of people are searching for it. A lot of people are talking about it. But The thing to keep in mind with Clover Health is what I like about it is that it was backed by Chamath Palihapitiya. He's a billionaire investor. He has about 1.5 million followers on Twitter, and a lot of people follow his every move with investing. For a couple months back in January, people were investing in all of his SPACs, even though they had no companies that were gonna be merging with them yet. People were just investing in whatever he was talking about. And that is why I think Clover Health has a very strong community behind it. It doesn't really matter what these companies do, because that's not what you're looking for in a short squeeze, but what they are is they are a Medicare insurance startup that went public just a couple months back. And we're not gonna go too much into details of their business. The important things that I find with this is, number one, they were backed by Chamath. They were taken public by Chamath Palihapitiya, billionaire investor. He has 1.5 million followers on Twitter. People follow his every move, and people actually listen and care about what he's investing in, where he has his money. The second thing I do like about Clover Health in particular, not that it's run up massively, but the second thing, which is on our list of items that I like to check off, is going to be its short interest. So right now, Clover Health, its short interest is very, very high. It was around 31% yesterday. Today, it's sitting right around 27%. That's higher than AMC. That's higher than GameStop. That's higher than a lot of other stocks out there right now. Remember, the average is around 3 to 5%. So short interest of 27% is extremely high. Another reason why I do like this is that when you're looking at market cap of Clover Health, it's $9 billion. That's much lower than AMC. That's much lower than GameStop. So even though market cap isn't the most important thing, it is pretty important because it's much easier to double a $9 billion stock, much easier to get $9 billion than to get $25 billion, for example, to double AMC. So for those reasons, I really like Clover Health as being a potential short squeeze. We have not seen the short squeeze happen yet, even though the stock is up about 100% in just the last couple of days. We have still not seen the short squeeze happen yet, just because, remember, short interest is still well over 25%. Second stock I want to go over is Workhorse. Workhorse is a stock that has been doing extremely well lately. It has a short interest of 29%. I think it's the highest one on our list of stocks for today in terms of short interest. Ever since earlier this year, Workhorse, they are an electric vehicle startup. They make electric delivery vans and last mile delivery vans. But the thing to keep in mind with this is there has been a strong community behind Workhorse for a while. If you search on Google Trends, if you search on YouTube, there are some YouTubers dedicated solely to Workhorse. There are communities on Reddit, on Twitter, dedicated solely to Workhorse, and they are strong. People really, really like Workhorse. So why do I think Workhorse can be the next short squeeze? We've already seen it start to run up, but meanwhile, shorts have not been giving in. They've been continuing to put more and more money betting against Workhorse. They're saying it's going to fail. Ever since Workhorse lost a major contract with UPS earlier in the year, they have been shorted massively. There was a contract that was going to be 165,000 vehicles with UPS that they were expected to get. They lost it. It went to Oshkosh instead. So ever since then, institutional investors are betting against this stock, and it has not done too well. But I think we are primed to have a massive rally very soon. Like I said before, market cap is important. Market cap of this stock is around $2 billion. So very low market cap. It's going to be easy to move this stock if there's a lot of people pushing and rallying behind it. And with the run-ups we've had over the last couple of days, I think it's getting more attention. More people are talking about it, and that's going to be a perfect recipe for a short squeeze very soon. And the other thing you got to keep in mind is that this stock was as high as around $45 per share at one point. So we are nowhere near the highs we were at. AMC, on the other hand, they've already reached all-time highs, and while I think they can go higher, they already are breaking new records. Workhorse, on the other hand, is nowhere near to its record highs. Third stock I want to go over in today's video is Wendy's. I've been getting a lot of questions about Wendy's recently because it was up 25% during trading hours the other day, up another 5% after hours, and people are saying this stock is going to be the next AMC. So I wanted to go over this one, not because I think it's going to do what AMC did, but I want to point out a couple of things to keep an eye out for when you're looking for a stock that can short squeeze. The first thing to keep in mind is that yes, Wendy's stock has been sort sort of labeled as the first fast food meme stock. But the key difference with Wendy's versus AMC versus some of these other companies is that Wendy's is actually a strong business that's growing very rapidly. AMC has been struggling. GameStop was struggling with the pandemic. They're having to change their business models, figuring out what they're going to do post-pandemic because, people may not go to movies as much. They may stream more. With GameStop, people aren't buying games as much as they used to. GameStop has to reinvent their business. Wendy's, on the other hand, is not struggling. They are growing very rapidly. They are a fast food business. They've been established for decades, and they're not going anywhere. So in my opinion, yes, Wendy's is benefiting from the short squeeze we are seeing. It is getting a little bit more interest on Wall Street Bets. More people are talking about it there. But the key difference between Wendy's and some of these other short squeeze stocks is that Wendy's betting on Wendy's is not like you're betting against institutions, because a lot of institutions believe in Wendy's. It doesn't have nearly as high of a short interest. The short interest on Wendy's is only 4.6%, so it's right in that average range. So really what we're seeing today, we've seen over the last couple days with Wendy's, it's just getting a little more tension, a little more of a community built behind it, more people talking about it. But other than that, if you're looking at it as a short squeeze, it only has 4.6% short interest. That's very low. That is nothing. That's not a perfect recipe for a short squeeze. That's just like average. Any stock you look at probably has between 3 and 5%. And then the last stock I do want to go over for today is going to be AMC and GameStop. So right now, AMC stock is up 2,638% for the year. That is absolutely insane. Crazy. So even though the stock has leveled off over the last couple of days, like for example, over the last trading day, it was relatively flat. Even though it has been doing that, it still is a perfect recipe for a short squeeze. We have not seen a short squeeze happen yet with AMC. Short volume ratio is sitting right at 21%, and like I've said, that is very, very high. In addition to this, with AMC, even though we're seeing insiders sell off their positions, even though we're seeing a couple of things, negative news come out with it, it's not deterring anyone who is part of the AMC community, because we're seeing AMC stock hold strong at around that $50 to $60 per share range. So with that being said, AMC has a strong community, one of the strongest ones out there. Their entire YouTube channel is dedicated solely to AMC. The AMC stock was trending on Google searches. It was the most searched thing on all of Google for the last couple of days, with over 500,000 searches every single day. So the community is strong, short interest is high. And the other thing to keep in mind is that right now, the volume is crazy for AMC. We are seeing over 200 million shares traded every single day. So between all of these things, between short sellers not backing down, I think AMC still could, easily double, triple, and reach that $100 per share range that a lot of people are talking about. But the thing to keep in mind is that the market cap is a bit higher, $27.6 billion. So it is a bit higher than other stocks. It's more in the range of what GameStop is, but just something to keep in mind moving forward. I like, all of these stocks have really benefited from meme stocks, Wall Street Bets, and the power of social media and communities built around them. So I just want to let you guys know what I look for when I'm looking for a stock that could have a massive short squeeze. I wanted to point out Wendy's, why I think, it isn't really an ideal candidate, even though people are talking about it. And I also wanted to address what was going on with AMC.